sort of all the leading indicators. You're as worried as anybody about what's about to happen here. How would you answer the question about the recessionary playbook? I mean, do you need to break it out right now?
I think you do, and I think, of course, it's the lags are long and variable, as they say in economics. So, and it's hard to believe. It seems like an eternity ago. The Fed was actually easing. The Fed was actually actively,
11 months, Jason. Let's be accurate.
Wow.
Just 11 months ago.
Right. So they were actually increasing the size of their balance sheet. I would also add to Steve's list corporate profits. I'm a supply sider. I think corporate profits are really the source of employment and capital spending and all the other things that go on that create a recovery or a recession. And in my opinion, clearly corporate profits are slowing, which does not augur particularly well for employment. So I think, what I heard from Jamie Dimon, it was interesting, is that it was less fire and brimstone, I think, than we had heard him last year.
Economic
where he was a hurricane
coming, yeah.
and so on. It didn't quite sound like a hurricane, but by the same token, I think he knows, just like everybody else, or like William Goldman says, no one knows anything, right, from Hollywood. And so we're all waiting, but I think the odds are good that you do get a recession later this year.
Mark Smith, I know you're thinking that kind of what Steve was outlining, that maybe half a point hike is still in the cards here.
Yeah, I agree with Steve. I think that at the end of the day, when I talk to my clients, they're like, where are we right now? And you got to always go back to the Fed. We've been talking about this for over a year, and they're looking at the data, right? CPI was way above estimates. New payrolls were more than double, right? We're expecting 187K. We got 517K. So if I'm looking at a plane and we're trying to do a soft landing, this thing just spiked right back up from January numbers. So if February continues what we saw in January, you're got to say, I can't say we're having a soft landing because the numbers aren't indicating that. And that's what the Fed's looking at. So that 50 basis point increase is going to be more and more likely as these numbers come in. And so I'm telling my clients, if that's the case, if we're higher for longer, then you've got to see what sectors do well in that environment. And I always point back to the banks. The financials are going to do very well in this environment, given all the different ways they can make money.
And I want to ask everybody about that sort of tactically. But do you think that it's just too much to extrapolate from 1 month's data? The November, December were pretty awful. That was before the January jobs report. We were all thinking like maybe the recession is starting now. It was so bad. Consumer spending hit a wall. Manufacturing's been in a recession for months now.
Services were negative.
Everything was. So yes, January was strong, Mark, but is it just offsetting some of the Q4 weakness that we saw?
Well, listen, if I'm looking for a soft landing, I want those January numbers to not be as great as well. And the fact that they spiked back up should tell you that soft landing is becoming less likely. And so, again, I'm looking at the data like you all are. And if February comes in similar to what we saw in January, we got a problem. And the Fed's going to have to act aggressively. And that's what I think the market's not anticipating.